It's time for our metals spotlight. Gold and silver are falling as renewed US-Iran strikes push oil prices higher, adding to higher for longer rate fears. Joining us now is Bloomberg's metals reporter, Jack Ryan. Jack, can we blame everything on Iran, or is this partially a result of what might happen with the Federal Reserve as well?
Yes, well, I mean, ultimately it's been a similar story throughout the year, really. It's headlines come through showing some sort of escalation in the Middle East, and then we get a sell-off. And today we very much had that. It dropped briefly below $4,000 an ounce again. And really it's just about these oil prices feeding through into what the Fed is seeing, potentially feeding through into higher rates this year. And that's punishing gold. You can see that through ETFs and through various other ways of holding gold.
Well, one of the very bullish theses around gold specifically had been those ETFs. So maybe some of the flows stopped there. The other one, Jack, though, had been central bank buying. Has that started to ebb? Why is that not helping hold up or at least put more of a floor underneath the price of gold?
It's a good question, and central bank demand has actually been relatively robust. It's really, I think, the only bright spot in the gold market at the moment is that central bank demand. They bought about 250 tons in the first quarter, which was the fastest in a year, actually. But I think it's the power of the ETF outflows. I think that's really the kind of marginal price setter in gold at the moment, and that's why we're seeing this weakness.
So, Jack, a while back, silver and gold bifurcated, right? They went in different directions. Why are they going in the same direction now?
Silver has had a much more dramatic ride than gold. It's been much more volatile generally. There was a lot more speculative and retail interest in it relative to kind of the rest of the investor flows. And so kind of once that came out in January, it hasn't had the same level of support. Some people have pointed to a potential weakening in the industrial demand picture for silver as well. And that's why I think we can see silver acting as it normally does, which is when gold goes one way, silver goes twice as far the same direction. And that's what we've seen over the last couple of months.
Jack, just in terms of what some of the strategists are saying that you've been discussing, given that gold has started to become somewhat of a problem child, have we seen downgrades in expectations, or is there any hope for the precious metal?
Yes, well, I mean, or investment banks, I should say, have been kind of cutting their forecasts throughout the year, really just bringing it in line with where the prices are. The overriding kind of thesis you get, which is what you got through last year, is pointing to these bigger themes of dollar debasement, rising debt, this kind of stuff. So most analysts are still actually bullish. But as I said, they've been cutting their forecast throughout the year. And a lot of people see this kind of this dynamic of rising rate expectations and ETF outflows. A lot of people say don't stand in the way of this while this is happening, because we don't know exactly yet whether $4,000 an ounce is support for gold.